Imagine pulling out your phone to check your balance, and instead of a number, the screen simply snaps to black, and it stays that way for a full 7 days. Most of us walk around with a specific picture in our heads. We deposit a paycheck, and we imagine that money sitting safely inside a heavy steel vault, quietly waiting for us to return. But that vault is an illusion. A modern bank is actually a complex series of invisible pipes. They are the active plumbing beneath every card swipe, every payroll deposit, and every international shipping container. A 7-day banking blackout halts the engine of modern life. When these pipes stop moving, the basic logistics that coordinate a functioning society stop with them. This scenario almost played out in March of 2023. A rumor about Silicon Valley Bank began circulating in group chats. Within 48 hours, depositors attempted to pull $42 billion from the bank. It was destroyed by the sheer speed of digital fear. Historically, a bank run meant standing in a physical line for days. Today, social media and mobile apps allow mass panic to drain an institution in one afternoon. If panic spreads to the entire system, the only tool a government has left is to declare a mandatory multi-day blackout to stop the bleeding. But hitting the pause button triggers a completely different kind of cascade. In the first 12 hours of a system-wide freeze, ATMs run dry. You try to buy groceries, but the terminal returns an error. Your debit card is just a piece of plastic. To actually work, it requires an active digital handshake, called a payment rail, connecting your bank, the merchant's bank, and a clearinghouse in a matter of milliseconds. When those rails shut down, trade stops entirely. Businesses quickly try to shift to cash-only models, but they hit a mathematical wall. This diagram shows fractional reserve banking. You deposit $1,000. The bank lends out $900. The borrower deposits it, and the cycle repeats. Zooming out to the entire $21 trillion US money supply, only 10% exists as physical paper. Having $500 hidden under your mattress gives you a slight head start, but once local shops run out of inventory, that paper buys you absolutely nothing. By day 3, the financial shock reaches the physical world. We see the effects hit supermarkets, hit local trucking routes, and gas stations. Logistics networks don't function by handing over stacks of 20s. They rely on constant digital credit lines to dispatch drivers, fuel trucks, and clear international shipping containers at the port. Your local grocery store only keeps 3 to 5 days of inventory on hand. The moment automatic restocking payments fail to clear, wholesale suppliers stop loading trucks. The shelves begin emptying rapidly. We can see exactly how this plays out by looking at the ongoing collapse in Lebanon. Their supermarkets faced massive shortages. The food existed, but the financial machinery required to import and distribute it was totally paralyzed. By day 4, the abstract loss of digital funds has translated into a very concrete shortage of basic resources. Without working financial machinery, the physical necessities of life simply stop arriving. Many assume the government would quickly step in to restore order, but the state pays its civil servants, distributes Social Security, and funds its hospitals using the exact same commercial banking pipes that are currently frozen. In 2015, the Greek government imposed capital controls, heavily limiting daily withdrawals. Even with the banks technically partially open, basic state functions and public services almost completely stalled within days. A central bank might have infinite theoretical capital, but without the commercial banks actively processing transactions, they have no functional mechanism to push that liquidity down to the public. The logistics of national defense and emergency response rely entirely on private financial infrastructure. When that infrastructure seizes, the government itself is immobilized. Finally, day 7 arrives. The authorities announce the blackout is over. But restoring global finance isn't like flipping a breaker box in your garage. Every single direct deposit, automating mortgage payment, and international wire transfer from the last week is queued in a massive digital backlog. All of those data points have to be perfectly reconciled across thousands of different institutions. And if they boot the system up before the public feels completely secure, every single depositor is going to immediately attempt to empty their accounts, triggering an even larger crash. The entire global economy operates on a single invisible metric. The foundational asset is not gold, paper currency, or database entries. It is collective belief. In 2013, banks in Cyprus were closed for nearly 2 weeks. When the doors finally opened, citizens with larger savings accounts discovered a portion of their money had been forcibly converted into bank stock, just to keep the institutions afloat. The rules can be rewritten. A 7-day blackout forces everyone to acknowledge that the numbers in their accounts only matter if the rest of society agrees to honor them. Turn the system off, and that shared agreement evaporates. We have constructed an incredibly efficient system capable of moving billions of dollars across the planet in seconds. Yet beneath all of that speed, our daily survival is balanced on an invisible, remarkably delicate web of human trust.